I need to quickly comment on what's going on in the REIT sector because Blackstone continues its buying spree and your favorite REIT could be the next one. Let's talk about what's going on here because BlackRock has bought 4 REIT in a short amount of time, and this time it's a $10 billion deal in cash and in debt, and it's of Air Communities, ticker symbol AIRC. So this $10 billion deal puts a lot of people into being a permanent bag holder in this case, because let's take a close look at how this stock has been trading. Since its IPO, it's been trading at higher valuations, and then when the market became depressed on the increasing interest rates, well, then Blackstone takes advantage and buys for a 20% premium to market price in this case. So if you were a shareholder in this company, you bought, you liked the dividend yield, you thought, all right, no worries, it dropped some, I can just continue to ride this out, I can just collect my dividends and eventually stock will recover. Here comes Blackstone and buys your shares, whether you like it or not, whether you bought low and you have to sell and take those capital gains taxes, or you bought high and you become a permanent bag holder. Well, Blackstone's here to take the shares off your hand. And what does this tell us as, small time retail investors? Well, it tells us that we're not the only one who eyes the amazing deals in the REIT market right now, the depressed housing market. Blackstone, they view these deals as being so valuable that they're willing to pay 20% above current market premium just to secure this asset, to make their own investors richer. And we need to learn from this as retail investors. We need to watch what the bigger guys are doing and not just get caught up in panic, selling away assets that Wall Street is picking up for cheap. And if you've been subscribed to this channel, you've seen me talking about REITs a lot in the last few months. That's because I think that in terms of valuation, they're valued very cheaply in many cases compared to the assets that they have on their balance sheet. And the market is really spooked with the increased interest rates because those hit REITs especially hard. So this is the fourth time they're doing this. Just take a look at this article here from Blackstone's own website. This time it was a 3.7 billion acquisition of Resource REIT. They keep on doing this, they keep on buying assets for cheap. And I think it's important to be aware of this, to be aware of what the bigger investors are doing. I've been, I've been a part of this before when I bought this liquid neutral gas shipping company. I was very happy with the valuation that I was able to buy it at. Extremely cheap. It went up by a lot, and when it was up 300%, they were bought out by big guys just like BlackRock, and I was forced to take that capital gains tax, against my will basically. And we will see this in the REIT sector now, so just be aware of that. There will be more buyouts because the window of opportunity is closing in this case. And we will not be able to see these cheap valuations for long in 6 to 12 months when interest rates will most likely be cut, in my opinion. Well, then we will see a recovery. And in that case, well, then the deals are not so amazing anymore. And as retail investors, we don't have to pay 20% above market premium to get in on a REIT at a good valuation. We can buy at market price because the few shares that we buy won't move the market. We're not BlackRock. All right, that's about it. That's what I wanted to say on this area. And as always, I hope you guys make a ton of money, whatever investments you decide to make. Take care now. Bye bye.